just let's get a general sense on the markets first from you. In terms of asset allocation decisions, where does Barclays stand right now?
Yeah, I mean, I think the last few weeks have seen obviously volatility return a bit more aggressively to markets, but certainly a lot of the fears that drove the sort of big pullback in equities and risk assets generally in last 2 weeks in particular, they look to be a little bit hysterical to us. We're not so sure that sort of global growth picture has necessarily changed, and actually we took advantage of the recent pullback to actually add to our developed market equity exposure.
Okay, so how big is that exposure now, though?
In terms of a sort of risk profile 3 portfolio, it's about 51% now. So that's a sort of medium risk investor as we categorise it for equities in general, which is a decent chunk.
Okay, mention some of the banks. Lloyds, of course, the story seems to get worse for Lloyds. UBS is in there, not looking too bad. What's your take? What's Barclays' take on the banks post-stress tests ahead of UK stress tests, given the trouble that Lloyds is feeling?
Yeah, for the AQR and the stress tests. I mean, they didn't look to be sort of, that much different from expectations, as you'd hope. The banks have done a lot of capital raising this year, and since 2008, a large amount of capital has been added to balance sheets. And so, we think that probably the AQR and the stress test will prove cathartic for both banks themselves and bank investors. And hopefully we'll see sort of credit markets continue to thaw into the year end. I mean, it's interesting that our colleagues at the investment bank, Barclays Investment Bank, have been pointing out for some time that the weakness in bank lending in continental Europe cannot fully be explained by the weakness in economic data, suggesting that banks to a certain extent have been holding back on lending in order to fill up their books. Now obviously there's a demand aspect to lending as well, but we do see bank lending channels continuing to thaw into the year end, helped and next year, helped at the margin by the ECB's various measures.
Speaking of the ECB and Europe, is the calm that seems to have descended a temporary calm, and how temporary?
Well, yeah, you can never say with Europe, can you? I mean, there's certainly plenty of things that could go wrong in the near term. There's, it does feel like Greek politics is starting to look a little bit eerily reminiscent again. The French political and economic picture is unappetizing, to say the least, and also Mr. Putin, his next move is going to be watched with great interest with regards to Ukraine. But by and large, we'd still expect the Eurozone to continue to make sort of stuttering progress into the year end, and sort of the ECB continuing to buy the politicians time to construct that fiscal and political architecture, which is going to take some time. So Europe is never going to be one that's going to be easy to look at, but I think probably risk assets are worth holding in the region.